Hello everyone, welcome back to Fundrise Finance. The month of August was a tale of two halves for the stock market. The first half of the month, we saw the markets decline almost 5%, but made up most of it towards the end of the month. And overall, by the end of the month, the market dip was just 1.5%. In today's video, I'm going to go over how much my portfolio made as income through options. So without any further delay, let's check it out. So this is my Google Tracker sheet where I track all my option trades. So to briefly go over this particular sheet, first we have the stock ticker, the option strategy. I only deal in cash liquid puts or covered calls. How many contracts were raised, when they were open, what's the expiry date, and when was the contract closed. So if it's an active contract, how many days to expiry? If it's closed, how many days was I in trade? What's the current price of the stock? How much did it change in the current date? How much gap is there from stock price to the strike price? This is the amount received section, which has a strike price, what's the action. Almost all of them will be sell to open. Then how much premium I received, there's a contract amount, then commission and fees, which when removed from the contract amount, what's the final received value. Then I have something called a suggested sell, which is nothing but how much percentage of the premium received am I willing to keep and sell the buy to close transaction. Now I have a profit target of 75%. So when I sell a particular contract and let's say I receive $10 for it, I'm happy to keep 75% of that and raise a buy to close transaction. So the net profit will be 75%. So this gets auto-populated whenever I fill in the amount received section. Now this is my amount paid section. The action, this can have buy to close, assigned, or expired. Rarely do I have expired transactions because as and when I have a sell to open completed or filled, I create a buy to close transaction using my suggested sell price. That gives me the premium paid and the contract amount. Likewise, commission and fees, which were taken out from the contract amount, will be the final paid. What's the profit and loss I made on that particular transaction or on that whole trade? What's the committed amount for it? Then I have yield to strike, which is the premium received divided by the strike price. Then I have a return on capital and the annual return on capital. So to start off with, my first transaction was a SoFi, which was a cash secured put that I had to roll and take an instant hit of negative $15. As part of the roll, immediately I opened a sell to open. We have a sell to open record here for $45, which eventually got assigned. So the month of August was not a great one for growth stocks. Here you can see the tumble that SoFi had taken at the beginning of the month, and stock price fell way below my strike price. Eventually it got assigned. That's fine. In a sideways moving market, one can capitalize on that by selling covered calls on them. But as I have shown, SoFi stock went nowhere for a few days. So I had to wait for a few days before I raised a covered call on it. That's what we see here. This is a SoFi transaction, a covered call, which made me a profit of over $8. I had a similar one again later, though for a very small premium, but still $3. These are all breadcrumbs which slowly add up. Another SoFi transaction here for covered call, which give me another $3. And eventually towards the end of the month, I have a covered call open, which if it goes fine, I would get another $3. So yeah, small profitable transactions. Going back to the beginning of the month, we have another covered call on Verizon, which gave me a profit of close to $10. Likewise, another covered call on Lucid gave me a profit of close to $25. Then Citigroup, it's a huge large cap bank, but still it took a big tumble of more than 10% and it still has not recovered through end of the month. If I just had to hold on to the shares, I would have been at a massive loss. But I not only have the shares with me, but I also was able to raise covered calls on that and gain some income on the side. So this is how you hedge your position by using options. So this transaction gave me just over $13 in profit. Yeah, another covered call on Citigroup here, over $12. Another covered call here, again over $12 for Citigroup. Again, another covered call transaction, just over $7 this time. Another one here towards the end of August, giving me a $9 profit. And finally, we had an open covered call here. And if that closed as expected, that would be giving me a profit over $10. So if I just add up the closed transactions for Citigroup, I made just over $50, though the stock was in a free fall all over the month. Then I had my cash secured put on Sirius XM that got assigned. Sirius XM also took a big tumble through the beginning of August, falling almost 18% down to just over $4, and my strike price was at 5.5. So I couldn't roll the transaction any further and eventually got assigned, giving me $65. And then I started to raise covered calls on Sirius XM, though very minor, just over $5 over here. And we have another one open towards the end of the month. which if goes fine, another $4. And next I have AMC, where I had seen one of my biggest losses in the options journey so far. So AMC took a huge dive of over 35% over the August 11th weekend, and I deliberately had to close my transaction which I had bought at $25 and I paid $90 to buy it back, giving me a loss of $65. So this shows that options will not always be in the green. You will see some red days, and this was one of it. Then we have covered call on Bank of America, giving me a profit of just of $8. The bank stocks were brutal in the month of August. I could only raise covered calls occasionally. So here we have Bank of America later again towards end of the month, giving me just a profit of over $3. Then we have one other open. It goes as expected. It should be giving me a profit of $9. And then I had one on medical properties, which probably gave me a profit of $7. The medical properties also had one crazy month of August where it fell over 30%. So when the stock price is falling, in ideal condition, you would raise your cash secured put, and the stock is rising, you would raise a covered call. So for medical property stock that I already own, I couldn't raise a covered call almost towards the third week of August. So whichever I had raised, it just gave me a small profit, like you see here, of just over $7. Then I have another one open towards end of the month, which if it goes fine should give me a profit over $9. So these are all the list of transactions that got triggered in the month of August. So overall for the month of August, I had made just over $196 in options income on a portfolio just under $15,000, giving me an overall return of 1.32%. So if you look at the return growth chart, we started way back in late March when it was just under 1%. We hit a high of 5.15% in the month of June, that was a 4%. And from then towards end of August, we see a dip up to 1.32%. So this goes on to prove that in the options world, nothing is guaranteed. You win some, you lose some. The win streak is not always guaranteed. You will see days where you get a harsh reality check. In the month of August was in such a way that I couldn't raise covered call because most of the days markets were down, and because I already had many of my option contract assigned to me, I had no cash secured puts that I could roll. So that's why if you see almost all the transactions towards end of the month, including the open ones, are all covered calls. None of them are a cash secured put. The thing with cash secured put is that the fidelity through which I transact pays me a sweet yield of 4.91% on the cash that I held as collateral for the cash secured puts, which gave me additional dividend or interest income every month. But the month of August was not so good with me. All my cash secured put contracts got assigned, so I lost out on that sweet additional income. But no worries, the markets are back in an upswing. The markets are back in an upswing. That should help me raise decent income generating covered calls in the month of September. Let's see how that goes. I'll keep you all posted. That's all I have this video for you all. Hope you all found it valuable. Until we meet in the next video, let's try to do as much as possible to be financially healthy and keep taking those strides towards financial freedom. See ya. Bye.